The hour opened with bar 14. So to the hour opened with bar 13. Here's the open of the hour. And 24, the current bar determines whether the first hour or the current hour is a bear bar or a bull bar. But even if it's a small bear bar, that's still not enough reason to short on the 60-minute chart. The market's deciding, will the 23 break out below the triangle, lead to a swing down, or will the breakout fail, and will more traders buy the close of the bar and buy the moving average? You can see buyers at the moving average. Even though it's not 20 bars, it's still a good enough rally for traders to look to buy it around the average price. Can we go a lot higher from here? I don't think we will. I think the market started its 2 hours of sideways to down trading with bar 14. So even if we go above the top of the triangle, it probably will still be a trading range. Bulls, you can call it 2 legs down, 16, 24. You can call it a failed breakout below a triangle. But we're probably not going to go very far up or down. Bears are hoping that this becomes an endless pullback, so that we just keep pulling back. The bounces don't go up very far. Bulls can't make money, and we just keep trending down. This is the end of the hour, final minute. Can the bulls get a bull body on the hour, or will the bears get a bear body? And will the hour close on its low? Expanding triangle, the bears want the last hour to be a bull trap, a failed breakout, and they want a sell signal bar here, but they want as big a bear body as they can get. Endless pullback, it's basically an endless pullback is a small pullback bear trend. And it keeps trying to create buy setups, yet all the bounces are small, and the bear trend just keeps going lower. And the bears are hoping that this is an endless pullback. So it's a pullback and a bull trend, but the bull trend never resumes. It just keeps going lower. Parabolic wedge, and maybe it's a bull flag. Here, a pair of bear bars closing near their lows and below the moving average. So at that point, it's probably a bear trend. This is more of a traditional type of endless pullback where you have a strong bull trend and bulls keep looking to buy, yet the trend just keeps going down. The pullback just keeps growing. And it's a small pullback bear trend, and instead of it being a bull flag, it just lasted forever. At some point, the bulls give up. So you'll see a big bear bar closing near its low here below the midpoint, and that represents the bulls finally giving up, acknowledging that it's a bear trend. Bull channel does not look all that bearish, not a strong sell signal bar, not a strong reversal. Bulls try to get a resumption up, bull bar, bull bar, bull bar, yet it just kept going down. Not a very strong reversal, yet a new low of the day. It just pulled back endlessly. A lot of small bars, sideways bars, but it just kept growing. Big gap up, bull flag, bull flag, bull flag. Never looked all that bearish, but the bull flag became an endless pullback, a small pullback bear trend that lasted 4 or 5 hours. Strong rally, trying to get a bull flag, but it just kept pulling back. An endless pullback. Gap up, and never all that bearish. High 1, high 2, a wedge, another bull bar, it just kept going down, small pullback bear trend. And the bears were hoping that this is the same thing, that instead of this being a pullback and a bull trend, it's the start of a bear trend. And the bears really need to see some kind of a bear breakout. They need to see a sign of the bulls giving up. Big bull bars closing on or near their lows below the moving average. Here, a pair of bear bars closing on or near their lows. Here, a surprise bar down, 2 or 3 bear bars closing below the moving average. So what happened to the bulls? Well, as I said, it's very difficult for the bulls to get a second consecutive big bull trend day after when the first bull trend day is so climactic. So you expect a couple hours of sideways to down trading. The close of this bar is important. The more it closes on its low, the more likely this will be a bear trend. If we get 2 bear bars, 25, 26, closing on or near their lows, and obviously closing below the moving average, that would be enough to make it always in short. Close below the moving average, but tail. Remember I said the first target would be the 12 low, the bottom of the most recent buy climax. And that's where we are right now. Can the bull trend resume here, 26, 27, 28? Probably not, because as I said, we should get at least a couple hours of sideways to down, and this is only about 1 hour. So if we go up, it probably will be a bull leg in a trading range and not a resumption of the bull trend. Important bar. The more it closes on its low, the more likely we've seen the high of the day, and the more likely that we've begun a bear trend. That would be consecutive bear bars closing below the moving average, with one of them being a big bar closing on its low. That would make it always in short. If it has a fairly conspicuous tail, still bearish, but it still might be always in long. If it's always in long, can you buy the close, buy the market? It's currently 4 bear bars. 26 has not closed yet. So it's probably better to wait for it to stop going down and start go sideways before buying. But this close is important because it's not closing on the low of the bar. It's less bearish than it could be. One of the difficult things in these endless pullbacks is it never looks all that bearish, yet it just keeps going down. So it makes it really difficult to get short, even though the market's in a bear trend. Here, lots of bull bars trying to reverse, yet it just kept going down. So it's hard to short. You don't want to be selling at the low of anything if the market does not look very bearish. And that makes it really easy just to sit back and let it go without you. And that's okay. A lot of bull bars, hard to get short, yet it just kept going down. So the traders taking those trades, they use wide stops, they're willing to scale in higher, and they just take a chance that it keeps going down. So low probability bet, sell the close, sell above 26, put a stop maybe above 23, the top of the most recent sell climax, and you hope it keeps going down, knowing it probably will not. It's more likely that we're going to be in a trading range. What about this being a spike in channel down, a bull flag, spike, pullback channel? It is. And it's probably a micro wedge on a smaller time frame chart with these tails. But that doesn't make it worth buying. I would rather have it stop going down, start to go sideways for a few bars, and have a high 2 at the bottom of a developing trading range. Bears, they might sell 26 high, sell more higher. Limit order bears, stop order bears, they're not, it's not a very good stop order to just sell. You don't want to be selling below tails 24, 25, 26. A tail represents buying by the institutions, and therefore traders selling with a stop down there is a lower probability bet. Bar 1, bar 2, bar 3, bar 4, bar 5 told us that we might get a lot of trading range trading today. All the reversals, big bars, a lot of overlap, trading range type of trading. So what do you do here? I think wait. If it remains an inside bar, it's a low 1, but it's not strong enough for me to sell at the bottom. And for the bulls, 4 bear bars, I'm not going to buy the first reversal up. If we start to go sideways for a few bars and get a high 2, I might buy that. But right now, I think best choice is flat. Good bull bar. Bears, I think bears probably should get out. And for the bulls, it's still a small pullback bear trend. And that lowers the probability for bulls buying above 27. Better to wait to see if we get 2 or 3 bull bars. Or wait to see if we go sideways for a few bars and then take a second buy. You can see 5-tick trap. The bulls who bought above 27 are deciding whether to hold long. It went up 5 ticks. It looks like they tried to scalp out with 1 point. They have limit orders to sell 1 point above their entry, which is 5 ticks above 27. Those orders do not get filled usually unless it goes up 6 ticks. It did not go up 6 ticks. There were so many orders to sell that it's now back at the entry price for the bulls. And a lot of them are exiting, deciding that they were scalping, it hit their limit order, did not fill them. They don't want to take a loss. With the bears, it's still a small pullback bear trend. They're hoping that we reverse down all day, but with a bull bar 27 at the moving average and the 12 buy climax low, the math is not great for selling, certainly with a stop below 28. You have some limit order bears who want to sell above bars. They do not want to sell above a bull bar 27, but they are willing to sell a point or 2 above 27. So they place a limit order to sell a point above 27, and a lot of them are probably scalping. They exit when it gets down to the 27 high. Some will hold, betting that we're in a small pullback bear trend and that we'll get a new low below 26. Now, when it looks like this, and I'm still saying 75% chance we're going to get a couple legs of sideways to down trading starting by the end of the second hour, it's hard to believe. But I say it because mathematically that's what the actual odds are. It really is 75% chance. And sometimes, you'll rally for an hour or two, but 75% of the time, by the end of the second hour, the market will start a couple legs of sideways to down. It could be a bear trend, but the minimum is a couple hours of sideways to down after a big buy climax day like Friday. Since bar 1, most of the bars have had tails. So a lot of trading range trading. It's more likely that we're going to enter a trading range. This might be the bottom of it, might go a little bit lower, might get back to yesterday's high, Friday's high. Less likely, this is the start of a bear trend. I say that because in general, a bull trend becomes a trading range before it becomes a bear trend. And this has not become a trading range yet. And then also, I talked about the consecutive closes below the moving average 25, 26 as having prominent tails and not being very big. that's not how strong bear trends typically behave. So this is probably not the start of a bear trend. It's probably what I've been saying, trading range, trading range, trading range. We went down to the bottom of the buy climax 12. Bulls trying to get up to the top of the sell climax 23. But really difficult. It's terrible for swing traders. And it's difficult for anybody because chances are the market's going to try to reverse every few bars. It's good for limit order traders, traders buying below things, selling above things, scaling in, using wide stops, taking quick profits. But most traders should not trade like that. They will lose money. So most traders should be trading with stops, looking for swing trades. And some days it's easy, some days it's hard. And today is a day that has more limit order trading and less stop order trading. So there's not a lot to do right now. A pair of bull bars closing near their highs and above the moving average. So back to always in long, but still more likely a bull leg in or trading range than a resumption of the bull trend. I say that even if we go above 15, there probably will be sellers not too far above. Bull surprise, 29.30. So you will get bulls willing to buy at the market, betting that if it goes down, they can buy more and it will get back to the 30 close. Bears want lower high major trend reversal, but 3 bars closing near their highs, they'll probably need at least a micro double top. So if we reverse down, probably a minor reversal. And for the bulls, traders buying here, I think it's better to only buy here if you can put a stop down here and scale in lower. It's more likely that we're in a trading range, and the top of the range might be the 15 high, might be a little bit higher, but it's probably not far above 15. We had a bull trend from the open with a lot of overlapping bars and prominent tails. It was likely not to last all day, but we had 11 bar bull micro channel through bar 13. So something of a climax, we'd expect a couple legs sideways to down. We also knew that there would be at least a couple hours of sideways to down trading that started by the end of the second hour. It began bar 13, sideways for about 3 hours, and now the bulls are getting trend resumption up. Could be a little parabolic wedge in here. One pullback, 2 pullback, 3. Also a wedge, 1, 2, 3. But 3 decent bull bars closing near their highs. I would not short below 61. It's reasonable to get out of longs a point or so below a bull bar, a tick below a bear bar. But 58, 59, 60 is enough of a surprise, enough of a breakout, so that the bulls should get at least a small second leg up. And sometimes it's small, 12, 13, likely to get a second leg sideways, 2 up, and 15 qualifies, and so does 18. What about limit order bears selling 50 high and scaling in higher? I don't know. I would not. I've been looking for buys. I've been buying pullbacks, and I have not done any selling today. At least I don't think I did, because it's a bull surprise. Something that you look at and say, "Wow, I wasn't expecting that." Because it's a bull surprise, a lot of bulls will buy at the market or buy 1 or 2 tick pullbacks or 1 or 2 point pullbacks, betting that if we reverse, it'll probably be minor, similar to below 15. The one thing that's different now from earlier is we had a lot of time. So if you bought the 15 low and scaled in lower, you had a lot of time to get back up to that price. Here, we got an hour and a half left. If it sells off with this many bars, it might not get back up to the high by the end of the day. but it's probably the best looking rally that we've had so far today. 4 consecutive bull bars, assuming 61 closes near its high, but it's the strongest breakout that we've had. Sometimes strong breakouts can be climactic. Here we had, I think, 6 bull bars, and it was climactic, exhausted bulls. They took profits. Another strong rally, climactic. They took profits. But right now, nothing to sell. So either you're long, or you're buying, or you're waiting for a pullback to buy. And for the bears, I think they need at least a micro level top. Without that, not many traders are going to short. Are we going to get up to that measured move target today? No. 4404, we had an attempt at a top, attempt at a double top. Instead of breaking below the neckline and falling for a measured move, we're breaking above the top. So you got to be thinking it might rally for a measured move. This 3-month trading range has several choices for tops and bottoms. Several choices for tops. Is the measured move based on this? Is it based on the double top? Is it based on that high? The bottom of the range is here, but there are 3 choices for tops. And if you use the lowest of the 3 here, that's the measured move. But the market might be using this as the top of the trading range. If it does, then the measured move is a little bit higher. But no matter how you do it, it's around 4,400, just above 4,400. Plus 4,400 is a big round number. And then you can see the top of the channel is around 4,500, and that's a magnet as well. Do we get up there without pulling back? Nobody knows, but I've been saying for a year, it's better to bet on higher prices than on reversals. Sometimes the bears came up with reasonable attempts at reversals, but every one, I said, it's still more likely that we're going to get a new high than a significant reversal. Traders are buying every small reversal. And that's going to stop at some point. At some point, one of the reversal attempts will actually lead to a reversal. Weekly chart, many reversal attempts here and here and here, 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 here. You know, every one of those bear bars is a reversal attempt. And every one of them was a small pullback. But eventually, we're going to get a big pullback. We're not going to get that. We're not going to get a 35% pullback, but we might get a couple legs down like that. Daily chart, same thing. A lot of attempts at reversing. We've had many over the past year. You know, lots of big bars, bear bars. Yet traders bought every one, and we keep getting new highs. This is, I compare it to that April rally, and I think we're probably not going a lot higher. We had an 11-bar bull microchannel. Usually that will attract profit taking, so you get exhausted bulls. And you'd expect a new high after 11 bars in a microchannel, but not necessarily a big bull trend resumption. More likely, I think, probably sideways. So a new high, but not a lot higher. Kind of like this. I think this was a 13-bar bull microchannel. Went a little higher, got a couple more new highs, but it was sideways for about a month. It's also similar to the 5-minute chart here today. 11-bar bull microchannel. I said first reversal down would be minor, but we may end up going sideways for a lot of bars. Not many traders willing to sell below 61. I would not. Reasonable to get out a point or so below 61, but there will be other bulls with limit orders buying the 61 low. Look at 62. Its low is exactly at the 61 low. That means there were buyers at the 61 low. There might be so many bulls with limit orders to buy the 61 low that we are unable to fall below 61. You can see so far that's true. Now, what happens if we get a bear inside bar 62 closing in its low? you would probably get some bears willing to sell, and they'll look at this as a blow off top, a biclimax, little parabolic wedge, 1 pullback, 2 pullback, 3 wedge, 1, 2, 3. But I think it's probably better to wait for a micro double top to sell, or wait for 2 or 3 bear bars and then sell. Now, are there going to be more buyers or sellers below 61? Probably more buyers below. But a tight trading range is a magnet. For 40 bars, the market thought this was a fair price. They thought this was too low. They might think this is too high, so we may get drawn back there. Bulls, high 162, but a bear bar. That will reduce the number of bulls buying above 62. Now, you have 5 that closed bulls, 60, maybe even 61, disappointed 62. Some of them are going to decide to exit. And if enough of them do, then we'll get a micro double top, 61, 63, and you'll get more traders willing to sell a second reversal down. Bar 63, multiple of 15, corresponds to a close on the 15-minute chart. So if 63 closes near its low, then we'll have a 15-minute reversal and a possible failed breakout. So the last 15-minute bar could be a bull trap, and this could be a sell signal for a pullback into this tight trading range. So important bar. If 63 closes near the 62 low, you'll have a bear reversal bar on the 15-minute chart, and you'll have bulls getting out below, and you'll start to get bears shorting, depending on how big the bear body is, if there is a bear body on the 15-minute chart. For the bulls, 62 is a pullback in a tight bull channel. It's a high 1. Traders do not want to buy above 62, but you will get bulls willing to buy above 63. I think a lot of the bulls don't want to buy too high, and they don't want to buy right after a decent bear bar of 62, so a lot of them will wait to see if we get a high 2, a couple legs down. We're in the final minute of the bar, and look at the 15-minute chart down here. So that breakout on the 15-minute chart might fail. If this bar closes near its low, the 15-minute bulls who bought that breakout will get out below that bar. On the 5-minute chart, that makes 63 an important bar. Will it close near the low of the past 3 bars, which means the low of the 15-minute bar over here? The more it closes on its low, the more bulls will exit below 63, and you'll start to get some bears selling. Okay, so did not close on the low. You can see how it bounced up 2 ticks in the final second. I don't know if you were watching, but with 1 second to go, 63 was on the low, and then when the bar closed, it bounced 2 ticks in the final second. That kind of stuff is not random. That is computers. And they constantly do things, I think, to confuse everybody else, right? So there was some computer, pick a company. Is it JP Morgan? Is it BlackRock? Who knows? Some big, is it some high-frequency trading firm? Yeah, it's somebody. Some big computer sold enough to get 63 to go below 62, and then instantly bought to create a 2-tick tail on the 15-minute chart and to prevent a bear bar on the 5-minute chart, to lower the bearishness, to reduce the number of bears willing to sell below 63. So what do? Well, mission accomplished. That computer or those computers were trying to generate confusion, and they succeeded. That will reduce the number of bears willing to sell below 63, the 15-minute low. but it creates a problem for the bulls who bought on 61. A lot of the bulls who bought 61 disappointed 62, exited 63. Now we have a high one 63, but a doji bar and a bear bar 62, so not a very good buy. And for the bears, 63 did not close on its low. It's not a second consecutive bear bar, so not good enough for the bears, not good enough for the bulls. So better to wait for more information. How far down will we go? When you have a reversal, first target is always the bottom of the most recent buy climax, which is the 58 low. I talked about that. Bar 12 was a magnet on the downside. When we reversed off, the top of the most recent sell climax was a magnet on the upside, the 23 high, and that's where we got a little bit of a sell climax, 51, 52. Reversal got there and even went higher. Now, since this is not strongly bearish, can you buy at the moving average? That has been support all day. They bought it here, they bought it here, here, here. So some computers will buy it, but you got to be betting that we're going to get down to the 58 low, and that's just about the middle of the tight trading range. So we'll probably go a little bit below the 58 low. So not a good buy at the market situation. Better to wait for a couple legs down, small legs down. And for the bears, it's not very bearish. They've been buying just below the moving average all day. And we also have the support of the 58 low. So they're probably a buyers not far below. So a lot of the bears will wait, possibly sell with limit orders above 64, above 61. Bulls will wait and buy probably below the moving average, maybe the 58 low. Limit order traders, stop order traders, probably better to wait for a second buy signal or a second sell signal. So bear bar 64, and what happened? They bought it. So just like 52, just like 25, 26, 41, bear bar near the moving average, they bought it. You can never look at one bar and draw a conclusion. Well, since 64 is not a very good high one, can you sell the 64 high and sell more higher? Limit order bears made money selling above 31 and selling above 15 and selling above 50. They'll probably make money selling above 61 if we get above 61. So, some bears will sell 64 high, sell more 1 or 2 points higher, sell at the 61 high. But I think most traders will have a better chance of consistently making money if they simply wait for stop order trades. A day like today, there are not a lot of great stop order trades, and some of them require wide stops. Buying above 17, buying above 42. Well, 42, they could have made a point or two. The bull's a high one at the moving average. That has been profitable all day. But a tail and 2 decent bear bars, plus a possible wedge, 1, 2, 3, and a magnet here, apex of a 4-hour tight trading range. That lowers the probability for the bulls buying above 65. And limit order bears, selling below the high has not been a good strategy today. It's better to look to sell either if we get a double top 61 or above 61 with a limit order. And I think most traders should look for a stop order sell. And for the bulls, right now, this does not look like a good enough buy. We have the reversal bar on the 15-minute chart. And the bulls are hoping that the bar is the start of a pullback and not a reversal. The bears want the 15-minute bar down here in the lower left-hand corner. They want a reversal. They want to totally undo that bull bar. And the bulls are hoping this reversal is just a pullback from that breakout. So they're trying to create a credible buy signal bar on the 15-minute chart with the current bar. This is bar 66. So it corresponds, it's a multiple of 3. So it corresponds to the end of a 15-minute bar. Just like 63 was at the bottom of 3 bars, 66 is at the top of 3 bars. So you have a bull bar in the 15-minute chart. I'm not trading the 15-minute chart, but the bulls are hoping to get a high one buy signal bar. Top of a tight trading range, a bear doji, small bull bar. Does not look like a very strong buy. Fetch choice right here, flat. For the bulls, it's also a breakout test of 50, but the bears who sold the 50 high made money. You see 64 fell 1 tick below the 50 high. That means some bears sold the 50 high. They sold more 1.